Computer, there we go. Yeah, so again, good evening, everyone. My name is Rene Liaw, and I've been here for about 10 years myself in this company. And of course, it's been an amazing journey for myself overall. But again, one of the main things that appealed to me, because before I was full-time in this business, I was doing it part-time, of course. And I come from the background of doing computer science. So I went to U of T, did computer science. Worked for IBM for my very first job, and was pretty stressed out after a year and a half. Switched to TELUS because they told me the future is friendly. So I went to TELUS for a while, and that was 5 years I was working as a programmer there. And pretty much when you're making $80,000 a year salary as a programmer, but you're paying about $24,000 of that in taxes, it doesn't often feel so good, right? So one quick question I ask people is, who here on the call is working right now? Just raise your hand if you're working a full-time job or a part-time job. Okay, cool. And for these guys who are working, how many of you guys, raise of hands, pay taxes? Okay, yeah. So, because by the way, if you're working and you're not paying taxes, that's actually illegal. So the CRA is going to come looking for you, right? And so again, one of the realities of being in Canada, it's a great country, and of course, there's different kind of benefits. But again, we have one of the highest taxes in the world. So one of the initial, I guess, attractions for me to have any kind of a part-time business such as GWT was because I heard that by having a business, that the expenses that you kind of already have that you pay for, if you had a business, would become a business expense. And when you have business expenses, what it does for you is you get taxed on a lower income. So let's say you made, and let me just actually share my screen really quickly for you guys, because I like to be very, very sort of visual on how stuff kind of works. And I'm gonna make it really short and not go through the full-blown kind of, taxing that I usually do. It's gonna be a much more faster version. But in short, let's say that your income was around $50,000 this year. That was your income, right? Approximately on a $50,000 income, you're paying about 30% income tax. So you make 50, but you pay back 15,000 to the government, and that's money that's gone. And that's quite a lot of money. So does everyone agree here? That's a lot of money. First of all, raise your hands. It's a lot of money, right, guys? And raise your hands, how many of you guys would like to learn how to save on taxes? Okay, so if you don't raise your hands, it means you want to pay tax. That's good. It's good for you. But if you raise your hands, you want to save on taxes. Absolutely. So again, so what we can do now is similar to how RSPs lowers your taxable income. So if you bought $10,000 worth of RSPs, your new income that you're being taxed on is $40,000 instead of $50,000, right? And so by paying less tax of 30% on the $10,000 in RSPs, you're saving yourself $3,000. Okay, so we won't get into why RSPs might not be the best way to save on taxes. One simple question is, do most people have $10,000 sitting around to go and buy RSPs? And most people don't have that money sitting around. So that's where I realized, well, if I had a business, the expenses that I have, now can be used to deduct my expenses because I have a business. So for example, who here, raise of hands, has a cell phone? Raise of hands, you have a cell phone? Do you have internet? Keep your hand raised. You have internet at home? Okay. Do you drive a car? And your car has to pay fuel. You have to maintain your car, right? Oil changes, car brakes, license renewals, oil changes, all that stuff, right? And if you lease or finance your vehicle, well, guess what? A portion of all this stuff now can become a tax deduction and lower your taxable income just like an RSP, right? If you transit, here's a good one. How many of you guys eat? You guys buy, you buy lunches, you buy dinners, you buy breakfast. Again, whenever you have meals now, if you're talking to whoever you're having a meal with about your business, anything about your business, and for example, one example of how you can talk about your business is you talk to the person beside you and you ask them, hey, do you like fashion? Hey, do you want to have better skin? Hey, do you want to have better health? That's now talking about your business, right? So again, if you do that, now the meal that you're having, you're doing it over business, it becomes a taxable deduction, right? How many of you guys buy groceries? Raise your hands. Who buys groceries for big gatherings? So guess what? Whenever I have a gathering at home, because I have a lot of marketing material on the table, like these catalogs, I have them on my tables at home. I might have some, products on display. So when I have a home gathering, I'm actually having a home fashion party. So guess what? My groceries for the home party becomes a taxable deduction. How many guys here have a Costco membership? Costco membership, guys? So guess what? I buy my business supplies from Costco. Guess what? My Costco membership becomes a taxable deduction, right? It's pretty cool stuff here. And so again, you can imagine, even entertainment, wherever you go somewhere with someone where you spend money at like an event, it could be like, I don't know, snowboarding, skiing, going to a concert, going to a movie, a play, could be, anything with this entertainment, going bowling with your business partners, whatever that you do for fun with your business partner, that becomes a taxable deduction. And how many of you guys here have a home with an office or computer area in your home? Raise of hands, computer area in your home? Right. So did you realize that everything in your computer area is 100% tax deductible? I'm sure you bought tables, right? For your home desk. You bought chairs, yes. You bought shelves, filing cabinets, printer, ink, paper, pens, staples, stapler, 3-hole puncher, power bars, extension cords, batteries, laptop, iPads, projectors, TV, coffee espresso machine in your home office, speakers for your home office. Guys, if it's in your home office, what do? You take a photo of your new stuff in your home office. You put it on Facebook saying, hey, look at my new home office with the TV for doing presentations. You now documented that your TV is for your home office. It now becomes a taxable deduction. So what I'm saying here, guys, is there's so many things that we already buy that if you don't have a home-based business, you're just not able to tax deduct these expenses. And you're not saving yourself on taxes just by having a home-based business, right? Again, accounting fee counts as well too, and travel, right? How many guys here have traveled this year so far? Raise your hands, or want to travel this year? Okay, so the reason why GWT is so unique is because our business, we can build it globally into any country in the world because FedEx ships our products, which means that you can go to any country and essentially expand your business. So wherever I travel to, all of my flights to anywhere in the world, because I'm going there for business, all of my hotels, my car rentals, my taxis, my Ubers, guess what? A complete tax deduction. So again, if you're going somewhere and your intent now is to go there to expand your business, now that flight, the hotel, the car rentals, all that stuff becomes a taxable deduction. It's going to put more money back into your pocket, right? Of course, promo. Here's a really important one because so many people don't realize that in GWT, this business, you're not actually paying for a business here. Here's why, right? How many guys here buy gifts every year? Raise your hands. Who buys gifts? Raise your hands if you buy gifts, okay? And I'm assuming you buy gifts for different occasions, right? There's Christmas is the biggest one. Mother's Day, Father's Days, anniversaries, weddings, birthdays is a big one, right? So, and where do most people buy their gifts from? I think most people who don't know about GWT buy their gifts from the shopping malls. But when you buy your gifts in the shopping malls, who are you promoting? You're promoting the shopping malls. Who's getting rich here? You or the shopping malls? The shopping malls are getting rich, right? And you're not able to tax deduct it because you're buying a gift from the mall. So again, is it safe to say here, guys, that you guys spend every year minimum $2,000-$3,000 buying gifts and buying shoes for yourself and bags and fashion stuff? Is that safe to say? Right? Every year, the whole year, you spend at least $2,000-$3,000, which is really nothing in my opinion, to buy the gifts, to buy your own shoes, your own bags, your own jewelry, right? So what I saw about GWT is I can have, instead of putting that $2,000-$3,000 and buying that stuff from the malls, why not take a part of that and get myself a diamond account at GWT that comes to $1,450 in Toronto here after taxes. But the cool part is the $1,450 for the business, I get back around $1,700 worth of products. Okay, you follow my point here, right? You're going to spend $2-3 grand in the shopping malls, buying stuff that makes the malls rich, promotes the malls brands, and doesn't give you a tax deduction. If you took a bit of that and got yourself a diamond package for $1,450, you got back $1,700 worth of products. Use those products to now give as gifts for Christmas, birthdays, or buy your own shoes from your own business now. Because when you buy a gift, when you give products from your company to other people, what are you doing? You are promoting your business. It's not a gift. You are promoting your business. It's now a promotion expense, right? Again, if the shoes that I wear and the watch that I buy is promoting my business, again, it's a promotion expense, right? So all I'm saying here is, don't think of this business as you're actually spending money to be in this business, which is normal in any business, by the way. You're just shifting where you spend your money. Don't spend the money at the malls. Put it into your own business, right? Because now when you buy gifts again, or you give items to promote your business to people, you're promoting who now? You're promoting yourself instead of the malls. And who's going to be getting rich then? The malls or you now? Most likely you now, right? And it's a taxable deduction. So, of course, even a portion of your rent and home can become a deduction if you have income in the business, right? But let me assume that for now, you have every intent to make money. You're going to try your hardest to make money in business. And the worst case scenario, you just didn't make it happen. Okay, so under rent and home, we have $0 for our write-offs. We tried really hard, didn't have any income, so we cannot write off your rent or home. If you do, you can't, but we're going to assume the worst case scenario for my example here, right? So again, the business $1,450, you must have a business, right, guys, in order to have these deductions. No business means no deduction. So in other words, the average person spends $1,450 to have a business to then be able to write off $26,000. So in short, if instead of me paying taxes every year as a programmer, I actually got back $8,000 as a refund. So there's two options for me and two options for you. Either you keep working your job and you don't have a side business and you keep paying taxes. That's you right now, right? That's you today currently, right? Or you start yourself a business for $1,450 after taxes, get back $1,700 worth of products, get yourself an amazing business that can make you unlimited earnings. And the worst case scenario, you try really hard, but you get back a tax refund of about $8,000 in our example. So option A was you keep paying tax. Option B is worst case scenario, your $1,450 becomes about $8,000. Which one would you pick? Option A or option B? Option A or option B, right? So in closing, what I always tell people is this, right? It's so funny because if now you know of a way to save on taxes, do we think we should start saving on taxes today, or should we wait 1 month to start saving on taxes? We should save on taxes when? Starting right now. Because every day that you go on without having a business, you're not keeping your receipts, you're not able to save yourself on potential tax savings here, right? So that's why I always suggest to people the 3 different packages, retailer, Palladium, Diamond. Diamond's always the best, of course, but pick wherever you can start. Because just get in, get the business, and start being able to write off your expenses, right? And here's another question I want to ask you guys, right? So let's say you had a really good friend, like think about your best friend. I don't know who your best friend is, but think about your best friend that you have. And your best friend, a year from now, you go for coffee, and they tell you, oh my goodness, I'm so happy that I got this $8,000 tax refund by starting a small business. And they didn't tell you about it. How would you feel? Like, why didn't you tell me? Like, why didn't you tell me until a year ago, right? Because again, so what I'm asking you is, now that you understand this information, do you not think that some of your closest friends and families, your loved ones, would want to know how this works? Because if you get a tax refund, I'm telling you guys, and maybe you made some money in the business, maybe you got some free products, and maybe you got some tax savings, right? Don't you think your friends would at least have wanted to know now instead of a year from now or 2 years from now, right? So I always believe that, again, when we put the best of intent to help others around us and to serve other people, you will eventually serve yourself. And that's exactly how I got to where I am today. Not because I was trying to make myself rich. That wasn't my focus. My focus was, how can I serve and empower everyone else around me? So that's how I built the business. It's really that simple. So again, folks, I highly suggest to get out there and, if you have people that that you care about who are paying taxes and, they're struggling or they have struggles or they want more in life, just share with them this stuff, right? So all in all, that's pretty much my part that I want to share with you guys. And I'm just going to quickly go and, allow you guys to unmute yourselves. So for any questions at all before I start, should I start the recording now or should we take questions first, Karen?
I think we could take a couple of questions.
Sure, yeah.
Questions if anybody has. By the way, that was fabulous. Thank you, Rene.
Oh, you're very welcome.
And, I know we've got some members on the line. Anybody need any questions answered right away?
Actually, I was going to make a comment, Rene, because when we talk about our taxes, and we are considering 1 year only. So when you put this into perspective for the future, 5 years down the road, 10 years down the road, this is it's like a compound interest.
Actually, right? Thank you so much for reminding me of that point too. And actually brought up another point for me as well too is, look guys, imagine, because right now the biggest struggle for Canadians when they reach retirement is retirement. Because the CPP, the Canadian Pension Plan, if you were to work your entire life, I think the average payout for Canadians is about $650 something per month. And let me ask you, is that enough to retire upon?
No way.
That doesn't even pay your property tax. It doesn't pay your car insurance and your home insurance. Forget about your mortgage payments. It doesn't pay anything else, right? So what I realized was, if the average Canadian can save $8,000 per year and over 30 years, that's $240,000 of additional savings in their accounts that could be used for retirement. And what if you made income in this business on the side to help you for your retirement, right? And that gave me another point to bring up. Thank you so much, Kelly, is because this is only the first year. The first year, you pay the $1,450 to have your business. Year 2, to renew this business, it's not costing you $1,450 again. The renewal fee is only $100.
Mm-hmm.
So watch my example, $100 on year 2, you pay $100 to get back almost $8,000 again, versus the $1,450 to get $8,000.
Great investment, $100.
Yeah, right. So again, it's not really, again, it's I guess the tricky term is, don't think of it as an investment, although some people treat it that way. It's really a business, guys, that the worst case scenario, you just can't lose. So,
yes. It's a win-win situation. Well, thank you, Rene. That is very, very enlightening. And we're going to go forth and share this with people and let them, have some advantages that they maybe didn't think they could take advantage of. So we really appreciate your time on this. Thank you.
Oh, you're very welcome. You're very welcome.
Anybody here in the room has a question?
Any other questions?
Do you have any questions at this point?
I have
To think about it?
Yeah.
Absolutely.
Okay. We're all digesting here, Rene, so you've left us with lots of food for thought. Thanks so much.
If I can say one last thing before I retire to my chambers, because it's about 10 p.m. here. Sometimes when we look at GWT with the tax benefits, we try to understand everything before we make a decision, right? And so one thing that helped me decide 10 years ago, because the first night that I saw this, I launched my business. And as a programmer, I'm very, very analytical. I don't usually wait. I don't usually do things right away. I always analyze things. But what allowed me to make the decision right away was this. Because whether or not in the end, I actually went and built a massive business, whether or not I want to even, promote back then jewelry, I wasn't sure about that, but the one thing I was sure about was I wanted to save on my taxes.
Yeah.
So I just figured, you know what? If the worst case scenario of launching my business today is I get back a massive refund by next year, I can figure out the business later. I can figure out what to do later for the business and learn it as I go along, and sort of, you know, like learn as you earn kind of thing. But from a logical point of view for the tax savings, it just, okay, separate all that confusion around the business from the main question is, do you want to save on your taxes? The answer is yes. Do you want to save a month from now, 2 weeks from now, or do you want to save starting right now? So hopefully that helps you make a decision, all right?
Thank you so much, Rene. That makes so much sense.
I was going to say is the following, because when we were talking about all those savings, we do, any time is a great timing. But right now, I think we are in a perfect timing just because our tax timing comes in April.
Yeah.
So that means all this cost that is all returned and is going to bring it back is going to lower our income and everything.
Pretty
so
much.
In a half, you can have lots of return back.
Like pretty much. It never makes sense to wait. Like, why would you wait to write off your expenses, right? I mean, just logically, like, so think of every receipt that you don't keep, that you don't get, you don't collect, or you throw it away, you're throwing money away. That's the truth. If you throw away the receipts, you're throwing away money. Would you ever throw away money? No. So
no.
Yeah, no, right? So okay, guys, yeah.
Thanks
Have
for
a great
being
one, right, guys?
Awesome. We love you, Rene.
Love you guys
Thank you.
too.
Good night.
Rock and roll, guys. Okay, bye everyone. Bye, guys.
Bye.
Bye, guys.